Okay, yesterday I went through the COT report that dropped and one number stopped me. NZD is sitting at 6% bullish sentiment and AUD is at 75%. Same week, same report. This is not a small difference. This is institutional money making a statement. So the question I have now is simple. What is market structure saying? Because if the chart agrees with this, we might have one of the clearest setup I've seen in a while. If it disagrees, then one of them is lying to you. So the current surprise engine is reading a lot of things happening. Kind of like moves are actually really going on in this market. However, these moves are not all the same or stable. It's looking different across board. But let's look at the COT report and see what last week looked like for the leveraged fund traders in particular. At the top of this table, we see the Australian dollar being heavily longed and a little bit of the short positions being removed, giving us a total net change of 7,000 plus contracts. That is a 75.34% sentiment. That is extremely bullish. Opposite that direction, we have the New Zealand Japanese Yen, which has 1,127 contracts removed from the long position and over 2,000 positions added to the short side. That is a net short position of negative 3,171 change, meaning that they were short this currency, or basically they ran short here. Now I didn't pick these two currencies out of the air. I picked them because they are both polar opposites on the leverage funds, and for them to be doing this kind of thing for two different currencies, it means there is something about these two currencies that we should pay a little bit of attention to. There once was a time when they were moving in very good sync. This was back in 2025, but ever since January this year, one has been going up and the other one has seemed to be crashing real hard. But apart from the Australian dollar and the New Zealand dollar, what other markets are being traded here? Well, we have things like the British pound, where we notice that they are still net long. At the same time, they are not also net long the euro. Matter of fact, they are actually short the euro. Another perspective to look at this market is the Canadian dollar, which is heavily being short. Compare that with the Swiss franc economy, which is also heavily being short. Even though the Swiss franc economy is known as the most stable economy in the world, basically the safe haven currency the world has ever seen, yet the leverage funds feel like putting money in there right now is not so profitable. Last but not least, we have the Japanese yen, looking at this whole situation with a bearish move also from the leverage funds. So basically they do not have much trust in the Japanese yen also. Now put that all together and you realize one thing. Out of all the currencies here, only 3 currencies are being trusted: the British pound, the Australian dollar, and the US dollar. But that alone on its own cannot tell us what the chart is going to look like. So let's take a good look at the other situations. So rather than going through all the Australian dollar pairs and the New Zealand dollar pair, you can give yourself one quick triangular equilibrium method. You go straight to the Australian dollar, New Zealand dollar, and look at what the market structure is saying. This is the place where we'll determine, are we buying the Australian dollar or are we selling the New Zealand dollar? And then we'll determine what to expect in any other places those currency appears in. So looking at the Australian dollar and New Zealand dollar week over week, we can see that this is a bullish market overall, week over week in terms of market structure. I want you to take your eyes to the right top and bottom of the screen. You'll notice that I have an indicator calculating the current fundamental situation of the market, as well as the base and quote strength of the technical movement. What we do see here week over week is that the quote currency is moving stronger technically based compared to the base currency. However, the fundamental indications, which is things like the GDP growth, the CPI, the unemployment rates, are kind of more screaming bullish move. So whatever move we're seeing right now may be a little bit of pullback or correction, but this is the weekly time frame and we cannot determine the whole magic from here. We have to look a little bit deeper. This takes us down to the daily time frame, and what we see right here on the daily time frame is a market that has switched kind of bearish. We've gotten the very first change of character down here. As you can see, this is the very first change of character anybody wants to look for. Standard market structure requires a pullback into good supplies and then a sell. Well, market already did the pullback the first time, didn't sell hard because it didn't close below structure, hence we did not get a new change of character. Secondly, in its second pullback, it did weak into the supply zones. It just went above the 0.5% mark, but never found itself staying above that level to consider a strong week. So in my opinion, I see a market that is coming down towards this demand zone to then buy up a little bit into the supply zones. That means one thing: the Australian dollar seems like it's going to really be stronger than the New Zealand dollar in the coming weeks. Adding that to the fact that the leverage funds are currently long on this end and short on the New Zealand dollar, you can see why they are making that kind of move. Let's go into the 4 hours and clarify this even better. Well, what do we see right here on the 4 hours? We see a tested demand zone, price rallied off it and suddenly found its way coming to the downside. Well, behind everything here, we do have some very small areas where we may see price rally up to the upside, or we see price find its way down into this fresh daily 4 hours demand zone, which is basically inside the daily demand zone, where price has been waiting for quite some time to trigger off some buys move. That way we may see major buying either this week or the forthcoming week, as long as fundamental and everything remains the same. Another data point I'd like to show to you is the latest snapshot of the markets in terms of fundamental, COT, and a gap situation. We already know the COT is bullish and the fundamental score is supporting the situation, with the Australian dollar having a 0.29 stance, which is quite positive, and the New Zealand dollar having a negative 0.62 stance, which is very bearish. That on its own is a major stance to say the Australian dollar does have a fundamental surprise strength against the New Zealand dollar by far. However, there's just one big caution. The caution is coming directly from the surprise engine, where it says the bullish momentum is available, but the gap is favoring the New Zealand dollar. What is the gap, you may ask? The gap is simple. The current data supports that the New Zealand dollar may keep their rates high, and if the New Zealand dollar decides to hike rates, it will gain strength. That is the only red flag we see right now on this currency. The other thing we need to also see is a bullish daily regime and a bullish 4-hour regime. AKA, if we see this chart starts to print to the upside, we then have very few reasons as to why we should keep selling this market. So what's my take? My take is actually quite simple. I would need to see the daily and the 4 hours turn into a bullish move. If they do turn into a bullish move, then I would love to be a buyer in this market, but being careful with my lot size, because like I said, the gap favors the New Zealand dollar than it does favor the Australian dollar. If for any reason the fundamentals should drop out of the bullish ranks into the neutral ranks, then this trade is automatically invalid and I should just stay away from the chart and let it do its own thing. I hope you learned something new in this video. If you did, do well to hit the subscribe button, like and share this video with somebody who you think may find this trading knowledge valuable to their trading career. I'll see you all in the next one. Peace.